Okay, we're now at the conclusion of our Chapter 7 lecture. So again, we're looking at the actual bank statement for this company, and we're going to compare the balance shown on the bank statement against the balance shown in their cash ledger account as of April the 30th. Okay. Checks, pay, and other debits that reduce the balance. So on the actual bank statement, it will show the actual checks that have cleared the bank statement. It will show also other debits such as electronic funds transfer that was used to pay bills out of our account. It also shows deposits that we made during the course of the accounting period. It shows any electronic funds transfer that came in as well. And if we made any deposits using the ATM machine. So basically the bank statement shows all the cash inflows and it shows all the cash outflows that took place during that particular period. Normally the bank statement will be for a time period of about 30 days. Okay. Now perhaps there's other items on the bank statement such as a debit memorandum, which is a notice that allows someone else to take funds from our account. So maybe there's a payment that we're making automatically out of our account, and we have a debit memorandum about that. There could be bank service charge. That's a fee that's been charged by the bank in order to maintain our account. I'm going to talk more about that in a little bit. NSF, sorry about that, stands for not sufficient fund. This is a check written to the company, but the check did not clear because the person who wrote us the check did not have sufficient funds to cover this. It's also known as a bounced check. A credit memorandum. So sometimes we may allow the bank to act as a collection agent on our behalf. Or it could be where a notes receivable, which is money owed to the company, where we have a memorandum. I'll need some water. That was good. Okay. So basically, with the notes receivable, when the note is collected, the actual payment is sent to a P.O. box. That P.O. box is inside the bank. It's known as the lockbox system. So to give you more content to that, normally when you pay your credit card or if you have a mortgage or your car note, that payment is sent to a P.O. box. Okay? The P.O. box inside of an actual bank. So the bank has employees who receive the information from your payment for your credit card, for example. They're going to process the actual payment. They're going to deposit funds into the account. They'll then send a company documentation showing what came in, when it came in, who paid it, etc. All right? Interest earned. So if you have an interest-bearing account as a company, then we'll also show, and the bank statement will show the amount of interest that was earned during this particular account period. So this is all information that's shown on the actual bank statement. Now, when it's time to reconcile the amount we call reconcile balance per books, that is the amount shown in our cash ledger account against the balance per bank, that's the amount shown on the bank statement. Often for a business, those two amounts are not going to be the same because of what we call time lags. Time lags are items either reported by the bank and not by the company yet, or reported by the company and not yet reported or reflected on the actual bank statement. Things such as deposit in transit, we'll cover those, outstanding checks, a bank memorandum, or errors either made by the company or an error made by the actual bank. Okay? So now it's time to do some number crunching to see how to reconcile the balance shown on the bank statement against the balance shown in your cash ledger account. Move this over. Here we go. So when we're trying to figure out what is our true cash balance. So once we've accounted for all of those time lags, what should be the actual amount to report in our cash ledger account? Let's begin with the balance per bank statement. Okay? We'll look at what we call deposit in transit. These are deposits made by the company, but not reflected on the actual bank statement. This happens when you make deposits at the end of the bank period. So for example, if I make a deposit, say on March 30th, and my bank statement cuts off on March 31st, depending upon what time the deposit is made, that deposit may not be reflected on my March bank statement because it didn't make the cutoff time period. So a deposit made by the company, not recorded by the bank, is known as a deposit in transit. Next, we have what we call outstanding checks. These are checks written by the company that have not yet cleared the actual bank. Now, I'm really bad at that. So I have rental property, and sometimes when my tenants, I got a few of them right here, I should go to the bank. When they send me a check for their rent, I don't deposit them right away. I know it's not a good thing. I should deposit them more quickly. But outstanding checks are checks written by the company, but they haven't cleared the bank yet because they haven't deposited yet. Okay? It means that in our cash ledger account, we record the transaction, but because the check hasn't cleared yet, it's not reflected on the actual bank statement. Then there can be errors made by the bank that need an adjustment, whether it would make our account balance go up or it could make it go down. Okay? So once we determine what should be added, what's be subtracted to get our true or our correct cash balance. On the other side, balance per book, this is the amount shown in the cash ledger account. We're going to add any EFT collections or other deposits made by the bank on our behalf. These are funds that went straight to the bank. They haven't recorded by the company just yet. If there were bounced checks that did not clear, we're going to receive a note from the bank saying that check number 1054 for this amount did not clear, and we're going to make the adjustment to our cash ledger account. Any type of service charge charged by the bank, or there could be a fee because we ordered some more checks, any type of service charge or other payments that we have been charged on our bank statement, we want to record these transactions to our cash ledger account. And then if we made a recording error by the company, we recorded an incorrect dollar amount into our cash ledger account, we will make the required adjustment so that once you're done, go back, the correct balance will be the same. So the purpose of reconcile is that once you reconcile at the end of the accounting period, you will know the true cash balance. Let's get to work. Let's say that here's some information we want to take a look at, break it down a little bit. Go back, stop that. So we know from the previous example that on the bank statement, get this out the way, move me, go there, go over there. On the actual bank statement, the bank statement showed a balance of $15,907.45. But in our cash ledger account, the balance is $11,709.45. Notice that those two amounts are not the same. We want to reconcile to see what items should be added or subtracted to the balance per bank. What items should we add or subtract from the balance shown in our cash ledger account? Okay? So we have the deposit in transits. The deposit that we made on April 30th received by the bank on May 1st. Therefore, they're not included on our April bank statement. These are checks that we have written. They have not yet been cleared. They're known as outstanding checks. These are other deposits unrequired electronic receipt from customers on account on April 9th from the bank says this is money that went straight to the bank but not yet reflected in our cash ledger account. We have a return check. There's a debit and credit card fees. There's a bank service charge. And there's also an error. Make sure you can see this error information. Check number 443 was written by the company for $12.26, and it was cash. However, when we recorded this amount, we recorded for $12.62 in our cash ledger instead of $12.26. Okay? So the question is, what items should I add or subtract to my balance per bank statement and balance per books to get my true cash balance? So let me ask you a question. Based upon the information shown here, what should be our true cash balance at the end of the accounting period? Well, let's see. Let's begin with our balance per bank statement. Okay? We're going to add deposit in transits to that. Again, these are deposits made by the company, not reflected by the bank just yet. Subtract out any outstanding checks. Come back to the bottom half to get our adjusted cash balance. So begin with our the balance shown on the bank statement, add our deposit in transit, subtract out the outstanding checks. So our adjusted cash balance should be $12,204.85. If that's correct, you now have a check figure. So now let's go to our balance per books. We're not going to add any EFTs. These are, again, funds, money paid by our clients or customers that went to the bank directly. We're going to add in the electronic funds transfer. There was an error in record check number 443. Remember in our cash ledger, we recorded for $12.62 and it should have been $12.26. So because of our error of $36, that amount of money should be added back into our balance shown in our cash ledger account. The NSF check, that's a check that was written to us, but the check didn't clear. So we need to take that money out of our cash balance per books because those funds are still owed to us. Then any fees charged by the bank for service charge, debit and credit card fees are going to be subtracted. So when we take the balance per books, add in the EFT, the error, subtract everything out, it means our true cash balance should be $12,204.85. Okay? So once you have reconciled, you have to make sure that the balance per bank statement now matches the balance per books. So you have to know what items should be added or subtracted from these different items. Okay? Now, whenever you add or subtract anything into the cash ledger account, this requires a journal entry. Because remember, this information right here is not reflected in our cash ledger account. So I'm going to come back with one more. I know this is the last one, but I don't want to rush it. I'm going to come back with one last journal entry or one last video showing you how to journalize any adjustments we have to make to our cash balance per books. And we'll also end it on looking at what's known as a cash budget and how to manage our cash account. Okay? One more comment, that'll be it, I promise. Stay tuned. Here we go.